California. And we're going to be talking with Hilary with Umpqua Bank about construction financing for an accessory dwelling unit on your property. So welcome, Hilary. Really glad that you're here, taking some time out of your day to kind of explain some of the differences and the products that Umpqua is going to offer. And I think one of the exciting things for me, at least, is that you have done hundreds of loans, and you are probably one of the leading experts from everybody that I've heard in financing for an accessory dwelling unit. So first of all, thank you very much again for your time today.
Yeah, absolutely. Excited to be here. Quick background, I am a licensed mortgage lender with Umpqua Bank. My name is Hilary Seiglar. I have been in lending for just shy of 12 years. My 12-year mark will be in May. And I got into ADUs in 2010 and I've never looked back. So I'm excited to share the different options and get people building ADUs.
I know, same here. So, and you are actually physically located in Oregon, but you were licensed to do loans in the state of California.
Yeah, California, Oregon, Washington, Idaho, and Nevada for construction loans. So I'm kind of dabbling all over, and we're seeing ADUs pop up. California is a really popular place right now for ADUs, but we're starting to see them emerge in Nevada and Washington. Oregon's been a hotbed for years, but those other states are really starting to get involved.
I think that's fantastic. Well, again, to everybody that's watching this video, this is going to be a little bit of a teaser. We're going to be inviting everybody for a webinar that's going to feature Hilary and myself, where we're going to invite people to participate and put in questions, anything that you might want to ask to dive deeper into this particular topic, because it's important. So with that, I'm going to get started. Just with a little bit of information for those of you that may not know what an accessory dwelling unit is, it is that the state of California and most states are allowed to be able to put the secondary home on your property. And we're going to spend a little bit of time talking about two different types of construction, and that's Title 24 and Title 25. Most people have not heard those two terms side by side, but very briefly, Title 24 is for stick-built houses. In most situations, your home that you're in is going to be built to Title 24 or uniform building codes for the state where you reside. So Title 25 is something that the federal government has put in place, and that regulates the construction of manufactured homes. Some people call them, mobile homes, factory built, prefab, but anything that falls under the construction guidelines of Housing and Urban Development, HUD. And on a state level, that agency is HCD, the Housing and Community Development. So two different types of construction, and that we're going to spend a little bit of time talking about the importance of those. But for now, I'm going to just turn it over to Hilary, and she's going to talk about some of the financing options for ADUs.
Yeah. So today we're going to focus on 3 different financing options for ADUs: the home equity line of credit, cash out refinances, renovation loans, and construction loans. And yes, there is a difference between renovation and construction loans, and we'll dive a lot deeper into this in the next few slides, but this just gives you a taste for what we would be looking at for financing an ADU.
Right, and I think that that's great. We're gonna, just a little bit on this one slide, one term that we like to use so people can become familiar with it is called non-conforming construction. We talked about Title 25, Title 24. If you put two different types of construction on one piece, the piece of property, could be some issues. So you need to be able to ask the question of your lender, or more importantly, Hilary, how is that going to kind of affect valuation, appraisals, and just the entire process? Where you have matching code construction, as an example in this one, you have a Title 24 and a Title 24 primary home and a Title 24 built ADU. Those are matching, those are conforming. But the next slide is basically going to be Hilary talking about the HELOC.
Yeah. All right, let's dive into the products and how you can finance a Title 24 ADU build. First product we're going to talk about is a home equity line of credit. This looks at your house as it stands today. What is the value of your home? And a bank or lending institution will give you a line of credit as a second mortgage on your home. Think about it this way. Let's say your home is worth $400,000 and you currently owe $200,000 on your home. You can access up to 80 or 90% of your $400,000 value through a home equity line of credit. So a bank will come in, they'll appraise your property, and they'll say it's worth this much today, and we will lend you up to 80 or 90% of that value. Now, home equity lines of credit don't take into account future value. They just look at your house as it stands today. It is a line of credit, so it is something that you can draw on as you're building your ADU. And typically payments are interest only, and the interest rates are variable. So this is where people get a little stuck and a little nervous, because home equity lines of credit do have a variable interest rate, but you do not have to go get additional lending. You can just get your line of credit on your home and go build your ADU. So if you have quite a bit of equity, this is a great option for you. And the nice thing is home equity lines don't cost you anything. They might have a small annual fee, but to actually apply for one doesn't cost anything with most banking institutions.
And that's what my experience is.
Oh, go ahead, David.
No, I'm sorry. I was going to say that that's one of the things I think is very attractive about a HELOC is the very low cost, and it's somewhat easy to kind of get that, make those funds available. You don't have to go through the involvement of the other products.
Right. The home equity line has a little bit less of a requirement in terms of income and assets. We still have to verify your income, still verify your assets, but it's not as in-depth of a process. In most cases, if you have a good amount of equity in your property, you're not actually required to have an appraisal, which is nice. That means you're saving money on the appraisal cost. So the home equity line of credit, for anybody that's got a huge chunk of equity and they know they're going to pay that line of credit off fairly quickly, and they're really good with understanding how credit works, this is a fantastic product.
No, I think it's really a good, it's a great one. I think that a lot of people should consider it as opposed to doing something that may have maybe a higher interest rate or more costs involved. So thank you.
Yeah. Oh, and then we missed the cash out refi. Could we go back a slide? There it is.
We did. I apologize.
Oh, that's okay. Cash out refi is option 2. And this one is, again, very much like the home equity line of credit. We're looking at what your house is worth today. And then the bank is saying, we'll lend you up to 80% of that value. Now, this is for primary and second homes. If you're doing a cash out refinance on an investment property, we lend up to 75%. So we don't go as high on the valuation stake for investment properties. What this allows people to do is access what they have in their home right now. So we'll use that same example. Your house is worth $400,000 and you owe $200,000. At this point in time, you can cash out up to 80% of the value, or $320,000. So what that means for this individual is they owe $200,000, we got to pay that off, but we can give them a loan of $320,000. That means they are going to end up with $120,000 cash on hand in their pocket. They can then piggyback a home equity line of credit onto that refinance and get another 10% of equity. And now they have about $160,000 to work with. So you can mix and match these products to meet your needs when you're building an ADU. Cash out refinances are typically 15, 20, or 30-year fixed mortgages, as opposed to a second mortgage that's variable on the home equity line. And the other nice thing about cash out refinances, you can do this on any number of properties you have. So if you own 1 or 2 properties, or you're an investor who wants to build multiple ADUs, you can actually access the equity in any of your properties to build an ADU on a different property. So it's just flexibility. How do you want your money to move? That's what a cash out refinance allows you to do. Product number 3, home style renovation loans. These are construction loans, and we have 2 types, the home style and then the portfolio construction. We'll start with home style. Home style renovation loans are 30-year fixed mortgage loans. So what you're actually doing is you are combining your current mortgage with the cost contract that you're going to get from David and Yimby ADU. They're going to give me all of the details on your build. I'm going to take that information and I'm actually going to give it to an appraiser so they can appraise the future value of your home. So what we're really looking at is how much is your property going to be worth once the ADU is on it? And we are able to lend to that future value. That's what makes construction loans so powerful. You don't have to have a ton of built-in equity to build your ADU. You are simply looking at what do I have available when the build is done, and then we can lend on it. And that is what the home style renovation loan allows you to do. Now, there are some hitches to this loan. You are limited to conforming loan limits in your county, and that varies by county in California. So when you call me and we have a conversation about where you're building, we will figure out if you fall into the home style renovation loan category or the all-in-one construction loan category, depending on your loan size and how big of an ADU you're actually going to build. So that's the home style renovation loan project. And you would be using that, again, based on what conforming loan limits are for your area, what you're choosing to build, and what the final cost of improvements look like.
Excellent.
And last but not least, construction loans. Now, this particular product allows anybody to use a smaller loan size or a larger loan size. So what we call conventional loan limits, which are typically a smaller loan size, and jumbo limits, which are over conforming loan limits for the area. And when we do our webinar, I'll actually bring up an entire map of the US and show you what conforming loan limits are for each state so you can see the comparisons. In this case, this is a bigger loan, bigger build, and or you're just slightly over the conforming loan limits for your area. Same process applies to this loan as the home style renovation. David and Yimby are going to give me a contract. I'm going to look at that contract, present it to an appraiser, and then they are going to give me future value on your build. I will then lend on that future value. So again, giving you that leverage, if you don't quite have enough equity right now as your house stands, we can use that future value to get you into your ADU. When you would use this construction loan, if you're over conforming loan limits, or it's taking a little longer to get permits than we'd like, we can use this loan because it doesn't require permits in hand to close. There's no requirements on what you do to your house. So a lot of people will use this loan to not only build their ADU, but renovate simultaneously. We see that quite a bit. And then they go live in their ADU, renovate the main house, and rent that out. So we see that fairly often as well. And this can be any builder that you choose, as long as they have a clean CCB license for the renovations. And of course, Yimby ADU, they will take care of everything on the ADU side. So all of these things can be, again, mixed and matched to fit your needs. And then the conversation that we have about your ADU build will land you in one, if not all of these categories for a loan, and you can pick and choose how you want to develop your ADU.
I think that's one of the things that I'm really excited about having a webinar, kind of diving into this a little bit more deeply, because these are fairly, complex, can have a lot of complexities to them, but someone doesn't need to understand them 100%. They would just set up a time to, talk to you or talk to one of your assistants, your people you work with, and kind of go through and find out fairly quickly which may be a really good product for them. And it doesn't take a lot of time. I think we were talking about it. It's not very painful. It's easy. You're not going to be pulling anybody's credit right up in the beginning until as you can kind of examine things and you would examine things that you would recommend for them.
Yeah, exactly. I have about 10 questions I like to ask. Those questions will land you in 1, 2, 3, or 4 pots. And then once we know exactly where you're going to be, we can start having the conversation and drafting estimates so you can see what the final project looks like before we ever pull credit.
I think that's fantastic. So thank you, Hilary, for your time and sharing with us, a little bit more about the products that are available to anyone who's interested in financing or pulling out some equity out of their home to get their ADU built. And again, we will be hosting a webinar with Hilary. We'll be taking a lot of questions. So as you're looking at this, make sure that you get in touch with myself, get in touch with Hilary. You have our website, which is yimbyedu.com. And right here, you have Hilary's email address. So you just reach out to us. We're here to help because we want to be able to allow you to push your ADU project forward. With that, thank you again to Hilary, and we'll be seeing you very shortly.